Hi, everybody. Thank you so much for joining the webinar. I just turned on the recording, so we'll make this available online afterwards. I wanted to welcome Chris Kopman and Janie Vandermolen from Newtrient. Thank you so much for joining us to give this webinar. Chris and Jamie are going to talk about the work that Newtrient's been doing to sort of develop protocols, technologies, and their work in the area of sort of market-based solutions for ecosystem services. For those of you who are on, if you want to ask any questions at any point, we're a small group, so I've just allowed you to talk and you can unmute yourselves, and Chris and Jamie, let me know if you want to sort of get through some chunks and take questions or take them as we go. Any preferences?
Small group, we can take them as we go. I think it makes sense.
Oh, good. Or you can write them in the chat window or the Q&A function, and I'll monitor those and just pass them along. So with that, I'll just turn it over to Chris and Jamie. Feel free to introduce yourselves, and we'll get going. Thank you.
Thanks. So my name is Chris Kopman. I'm technically the CFO at Newtrient, but I've been leading the ecosystem services markets activity at Newtrient for the last year or so. I've been with Newtrient for 3 years. I have a finance kind of business background. So before I joined Newtrient, I worked for Kraft Foods, kind of in the CPG space in various roles for about 16 years. So that's kind of my background. I grew up on a farm, so kind of being back to agriculture and with Newtrient for the last 3 years has been great. And I'm going to speak to kind of the ESM work, but before I do that, I'll hand off to Jamie Vandermolen, my colleague. She can introduce herself and give some quick background on Newtrient before I jump into the ESM stuff.
Awesome. Thanks, Chris, and thanks, Elizabeth. I'll provide a quick introduction. My name is Jamie Vandermolen. I'm the Director of Communications for Newtrient. I've been with Newtrient for the past couple of years, and prior to Newtrient, spent several years working for the National Dairy Checkoff in communication efforts. I'm going to start by providing you with some information about who we are, our mission, and kind of how we work before Chris decides to dive into the ecosystem services market work and some of the work that we're doing in Vermont. So, Chris, you can flip to the first slide. All right, wanted to quickly just put our mission up on the slide for you to see. So Newtrient was formed and kind of grew out of an industry need at the time 5 years ago. So we saw a huge opportunity to reduce the environmental footprint of dairy, to help build consumer trust, more efficiently manage nutrients on the farm, and just a lot of benefits that could come from reducing the environmental footprint. But also the second part of this is key in making it economically viable to do so. So we know that the first part of our mission statement is fairly easy and we can accomplish that. It's the second part that we're really focused on now, is how can we make this economically viable for farms to do so. And we know that farms provide so much value, from the products they can produce to the environmental services that come off the farm. So ensuring that we are setting up dairy as an environmental solution to face a lot of the environmental challenges that we see coming through today. Flip. And quickly, just, who we represent. So Newtrient is represented by 12 dairy cooperatives across the country, as well as Dairy Management Incorporated, the National Checkoff, and National Milk Producers Federation, who we work with on a lot of the policy work. So we kind of span all across the country and represent nearly all milk that's produced in the country and dairy farmers. All right, and just to quickly go through what our focus areas are. So since the beginning, we've really been focused in 3 areas, and Chris will focus on one of these today. But the first and the thing that we started with as Newtrient is looking at the technologies that are available to farms today. And in looking over all of the potential manure management technology options that are out there for farms, we built a team of experts to help evaluate which technologies might be most beneficial for each farm's unique needs when they're looking to manage their manure. So we built a technology catalog that's actually available online. If you go to our website, newtrient.com, you can access these technologies that are available. We've reviewed over 300 technologies, and there's 260 plus peer-reviewed, third-party, available to anyone, open online for free, that you can find in the catalog today. So we encourage farms out there to, as their first stop when they're looking to manage their manure or adopt a new technology, we'd like them to stop at the technology catalog just to ensure that they're getting kind of a third-party option and review of the technologies that are out there today. So in going through that catalog, we realized there are a lot of options, but we need to ensure that these options are also economically viable for farms to adopt technologies. And Chris will talk a little bit more about the economic gap that we're trying to close. But there's two areas of focus then following the technology that we're focused in. And the first one is business development, really around products. So how can we more effectively manage nutrients that on farm, as well as create markets and opportunities for farms to create manure-based products that could be used off the farm. So both on the farm more efficiently and potentially could be used off the farm as well. So this is the business development priority that we're looking at. And then the third one today, which Chris will dive into, is creating ecosystem services markets. So how can we help advance technology adoption and practices on farms? And a big part of this is through ecosystem services. So we've been doing a lot of work both on the ground and through some policy and legislative work in a variety of key states, including Vermont, that Chris will talk more about. So those are our three focus areas. And I will turn it over to Chris now to talk about Newtrient's work in ecosystem services.
Great. Thanks, Jamie. So I'd like to kind of start with kind of this page, which really what we're trying to illustrate. So when you think about what Jamie described, we're clearly coming at this from a dairy perspective with a big focus on the manure. But as you think about the manure and kind of how that's ultimately used, there's a natural extension into growing the feed to feed the cows. So we kind of are focused on the manure side, but also on the crops that are used to grow and feed the dairy cows. So when we look at, based on all those technologies we've looked at, as well as practices, this chart, is intended to kind of illustrate that, there's an implementation cost to the farmer, whether it's adopting a practice or a technology that processes the dairy manure. There are costs kind of illustrated to the farmer to do so, and that's illustrated on the left-hand side. And on the right-hand side, typically most of those practices or technologies, there is some benefits to the farm, typically in the cost avoidance side. But generally those kind of benefits fall short of covering the cost to do it. And so what you end up with, without any other benefits to quantify, is you're either adding cost to the operation or there's not an incentive for the farm to go ahead and adopt that technology or practices. So we call that differential is really the benefits gap, which is illustrated in the green box. And those priority areas that Jamie just walked through are really kind of what we've been focusing on to kind of close that benefits gap. So, advancing or incubating, and some of our terminology, some new technologies that can kind of process manure and turn it into a different form that could either be, generates incremental cost savings to the farm, or perhaps, results in the second bullet there on the right, which is products that could be sold off farm and generate revenue to kind of close that gap. Or lastly, the one that's circled there, which is what we're talking about today, which is, realizing revenue streams associated with ecosystem services markets. So this kind of is our way of illustrating that, some combination of those benefits are needed to kind of really incentivize more broad adoption of technologies and practices on farms, and from our perspective, from a dairy perspective. Taking a step back on ESM, on the left-hand side, there's a lot of different potential, I'll call them environmental outcomes that can kind of fall into a market-based solution: water quality, air quality, greenhouse gas reduction, carbon sequestration, soil health. There's quite a few of them out there. I would say that there's not a long list of, there's a much shorter list, I guess I'd say, of successful markets that have proven out that you can point to and say these are well-developed markets that are fairly broad. I would say some of those areas, and I'll use carbon sequestration as an example. There's a lot of interest in that. There's been a lot of conversation in the last year kind of publicly about that. But it's an area where there's a lot more research needed to kind of really understand, how much carbon can we store in the soil? How do we get the scientific credibility that can kind of, that's needed to kind of really develop a marketplace? So this list is illustrative of kind of the broad list of areas there, environmental outcomes that there could be markets based on. On the right-hand side, we've kind of grouped the potential buyers in those markets into two buckets. The top one being regulated, which would typically be a compliance market where perhaps there's an obligation, a permit obligation, or a TMDL obligation for a state, as one example, to kind of be a buyer for water quality, for example. Or in the non-regulated market, it could be a not-for-profit organizations that are geared towards, incentivizing environmental outcomes. Or over the last year, there's been quite a few companies in the food space that have kind of set carbon and greenhouse gas reduction goals as part of their corporate social responsibility. I would say that there's been a lot of news releases on that. If you go through them, a lot of them are setting, pretty significant reductions, but the time frame that they're giving themselves is quite lengthy. They're talking 2030, or in most cases 2050. So I think those are great kind of signals that there could be a market kind of that develops there, but it is going to take some time. There's not a long list of those companies buying those reductions. I think they're all trying to kind of get a sense of how do they go about meeting those goals when they look at their extended supply chain. So we think this page is a good kind of example to kind of highlight which outcomes are out there and kind of which buyers are in the market to kind of incentivize those. This next slide is really, a somewhat simple chart that we've created to kind of say, when you talk about a marketplace, there's sellers, people that are generating environmental benefits. On the right-hand side, on the left-hand side, there's buyers that are looking to kind of, incentivize those outcomes. And our view in the middle is, regardless of the type of environmental income or outcome you're talking about, whether it's water quality or air quality or soil health, or who's generating the environmental outcome, there needs to be some kind of entity in the middle that is a coordinator, whether it's a program administrator or a facilitator, to kind of really make the market more liquid. If you think about it from at scale, the ability of buyers to kind of go down to individual farms and kind of negotiate transactions, it becomes really challenging when you get past just doing one or two projects. So our view of that is an entity in the middle. The terminology we've got there is a clearinghouse. That could be take the shape of many different forms. It could be a government entity if you're in a regulated market, or it could be a private company if you're talking about a voluntary market where the buyers are companies that are looking to kind of meet corporate social responsibility goals. So it's more the concept of an entity in the middle trying to make that market more efficient. What I would say on this slide is, the few pages that follow, I'm going to speak to a methodology that Newtrient's put together on water quality. And it's more for discussion purposes. I would say, keep in mind the concept can be adapted as needed. It could apply to any different environmental outcome. It could be, the benefits can come from any type of seller, but I'm going to use agriculture as an example, but it could be other areas. And the buyer could be, a vast group of people that I kind of referenced. And that program administrator, it could be any type of entity. It could be a government entity, it could be a private, could be a not-for-profit that wants to kind of, manage a program and generate projects for environmental benefits. So I just wanted to kind of highlight that, I'm going to jump into an example on specific to water quality, but the concept could be adapted as needed, depending on what kind of environmental outcome or buyers are interested. So kind of looking at it from a water quality perspective, Newtrient's view is that a market-based mechanism is really the best way to kind of prioritize investments. And again, this example is related to nutrient loading to impaired waters. I think there's generally agreement that there's more investments needed to kind of fund the implementation of practices and technologies that go beyond what's required from a regulatory standpoint. And what we tried to come up with was a methodology that could prioritize projects based on the return on investment. So think of a quantified water quality benefit correlated with whatever the investment is. So in our view, you're getting to a dollar per pound kind of prioritization ability to kind of illustrate kind of the return you're getting for an investment. So I'm going to jump into the kind of methodology and try to explain our concept. So this page is a bit busy, so I'll spend a few minutes here just to kind of make sure I can ground in the page. So as part of a grant that the Agency of Ag in Vermont kind of awarded Newtrient back in 2017 out of the Clean Water Fund, we generated a protocol, which is really what we'd say a process that could be used to quantify and certify water quality improvement from a dairy operation. And that's kind of the 8 steps that are listed there. There's a ton of detail and paperwork behind it, but generally speaking, there's kind of those 8 steps are kind of what I'll walk through in terms of that protocol. With that, really the protocol is more the process that would be used to kind of really turn in an application for a project. Along with that, we're proposing to use a tool that Stone Environmental, which is a local Vermont firm, has created called Farm Prep to be the quantification tool to kind of calculate the water quality improvement. And then we've got there needs to be some kind of program administrator to kind of manage the program. So that's kind of the 3 pieces that we're marrying together there across those 8 steps. So really, step 1, just to kind of walk through these quickly, is really if a farm is interested in seeing if they can generate benefits, the first piece is really trying to determine are they eligible and kind of doing an assessment of their site from a standpoint. And that's really going through field by field, understanding what practices they've got adopted and kind of what their practices are on each field across their farm. The second step would be, again, steps 2 and 3 are within the Farm Prep tool. It's really kind of modeling out using Farm Prep, kind of what the farm is currently doing, and the assumption there to be eligible for a program is that the farm would be in compliance with the required ag practices or RAPs. So really the first or step 2 would be is running the calculations with what the farm has implemented as part of their compliance with the RAPs. That would really create a baseline. And then the next step would be is identify additional practices or technology that they could implement that would go beyond what they're required to do and generate incremental benefit. And again, using the Stone tool to kind of calculate what that impact would be from a water quality standpoint. Using those outputs from the Stone tool really would allow step 4, pulling together a summary of the project. And this would be encompassing kind of the costs associated with it, the economics, as well as kind of the quantified environmental benefits with it, as far as in putting that into an application that would be submitted to the project administrator for review, which is really step 5. And really, in this concept, if you think about as an example of this, if the state of Vermont has a clean water fund, if they were looking to kind of issue an RFP to generate projects to kind of create voluntary reductions that go above and beyond what's required from a regulatory standpoint, if they got a bunch of projects in, getting them in this format would allow them to kind of evaluate each of the projects based on a return on investment. And again, think of that in terms of a dollar per pound investment in kind of across various projects. It allows you to prioritize based on that. So that would be step 5. If they could select from that list of projects that were submitted to kind of determine which they would want to fund and implement. Step 6 would be the farm going ahead once they were kind of granted approval to kind of go ahead and implement the project. And then once that's complete, our view would, you would have a third-party verifier in step 7 that would implement or verify that the project was implemented in accordance with the application, and that the expected environmental outcomes would be achieved based on kind of the project being implemented. And based on that, the program administrator, as the last step, would basically certify the environmental reductions or outcomes, and they would be, either in a market base, would have credits, if you want to use that term, that would be available for sale, or if the state was the buyer, they would have those kind of reductions to count towards the investment that they made, and kind of report that as kind of a purchased investment that they made for the program. So that's kind of the 8-step process. That protocol, again, is what Newtrient kind of created, and then complementing that with the STONE tool provides the scientifically credible kind of quantification of the benefit, and you've got a third party kind of in the middle, kind of administering the program.
Chris, do you think should we just pause for a second? I mean, I think you're going to go into a little bit more depth on some of these steps, or the inputs and the outputs at least, but
yeah.
Folks, if you want to ask any questions just about this sort of flow that Chris has outlined at a high level, we could do so now, and then he'll continue. And you should all be allowed to talk if you just unmute yourself, or feel free to put it in the chat if you want. Or maybe continue on, Chris, and if somebody wants to, they'll hop in.
Sure. I think the one thing I would highlight here is, one question we do typically get here is, the STONE tool is a modeling tool. It's not a measurement tool. And I would just highlight that, in work we've done in this space, one of the challenges with markets is really kind of balancing, kind of the desire for certainty on kind of the environmental outcomes, both from a calculation standpoint as well as from a verification standpoint, with the benefits that they're kind of deriving. So, some people are kind of advocates for measurement in place of modeling, and I would say, I was actually at a meeting a few weeks ago, and I'll use the example of this was a soil health kind of carbon sequestration conversation, and a company had sponsored some work, and the example they had was the verification process they were going through basically was going to cost $50 per acre across a really large scale kind of pilot they were doing. And if you think about that, when you think about the dollar return that we're looking to kind of get from a revenue standpoint, a cost like that is really, really substantial, and really would almost outweigh any benefit you could hope to achieve. So I'll use that as an example of there is a tension of kind of understanding that, modeling from our view is more than sufficient for water quality. There's a ton of excellent data that's being used to kind of make the models better. And one thing we like about the STONE tool, it is calibrated with Vermont's data. So when we kind of run these calculations, it is field specific, it is farm specific. It's not using kind of regional or national kind of coefficients. It is kind of specific to the farm. So we feel like that provides a very sufficient level of scientific credibility related to that. So I would highlight that there is a balance between verification and cost associated with kind of making sure the environmental outcomes are real relative to kind of the benefits that and revenues that you would expect to realize out of it. So if there's questions on that, happy to take those. Otherwise, I'm going to kind of jump into a little bit more detail on farm prep, just to kind of give some quick background on that. So this is a slide from Stone Environmental. The farm prep tool is a tool they've developed. If you've been familiar in Vermont, in the state, there was a previous tool that Stone had used called VT Star. Farm prep is the next evolution of that tool. It's more of a web-based kind of model, I guess I would say. It is based on the Apex model as kind of the agronomic modeling engine behind farm prep. And really what farm prep has done is kind of created a front end that simplifies using Apex, which is a fairly complex model, pre-processing many of the inputs. And it is kind of informed with a rather extensive database of practices that are specific to Vermont, that they went through a process with kind of UVM extension and some crop consultants and technical advisors to kind of make sure that it was kind of, suitable for what's done in the state of Vermont. From a visual perspective, this is a couple screenshots I thought I'd show. So this is really on the input side. It's actually pretty interesting to see a demo of the tool. It basically, on the right-hand side, each of those are fields, F1, 2, 3, 4. And for each one of those fields, there is basically inputs that are kind of assumed based on geographic kind of maps of where those are based on databases that are available, all of which the farm can kind of go in, like soil information, for example, and can override that if they have better information than what's kind of pre-populated. And then really, the farm or their technical service provider would be able to kind of fill in for each of the fields kind of their practices that they're using on the field, crop rotations, what tillage practices or other practices, manure application they're doing, and structural best management practices that they've got in place as well. So there's a kind of a front end that allows you to put in inputs. And then the output side, I've kind of created this illustration of, on a field level, basically one of the key outputs, again, we're focused on water quality, is generating a total phosphorus improvement on a pound per acre basis. So you can kind of see the red box there kind of shows that, you can kind of conceptually visualize that you can kind of illustrate if no practices were done in the field, that would be kind of one column. You could kind of have a scenario run to say what the impact of required ag practices would be, and then a third scenario, which would be kind of additional practices that would go above and beyond the RAPs to kind of show incrementally what the improvements would be. I would highlight that the Farm Prep tool does have a optimizer, a scenario optimizer that they call it, that basically would highlight the types of practices that would have the most significant impact at a field level that a farmer could consider implementing, rather than having to kind of, come up with things. The tool will actually come back and give you options of what you could do and kind of what the impact of each of those options are.
Chris, could I jump in and ask a quick question?
Sure.
On this issue of the sort of baseline and then establishing additionality, can you just say a little bit more about sort of how the sort of RAPs are input as a baseline, and then also does everybody sort of get to the same baseline assuming that they're in compliance with the RAPs, or how does that work?
Yeah, so I'll flip to the next slide and then I'll kind of answer that, which I tried to more simply illustrate it. What I would say is it does require, it is farm specific. So our understanding of the required ag practices, it's not a singular list of activities that every farm must do. It's there is some flexibility on certain items that they could kind of achieve compliance with the RAPs in different ways. So it's not a linear list where this list is kind of practices is kind of part of RAPs and everything else is kind of over and above. It is kind of farm specific. So it's not going to be something that you can kind of, put a drop down that says, okay, these are your required ag practices and this other list is voluntary. It is going to be, there is some flexibility in how farms kind of meet the required ag practices. So it would be kind of somebody being, as far as an administrator, being familiar with kind of, the nutrient management for the farm, the nutrient management plan for the farm, to kind of understand how they got to be in compliance, and then kind of illustrate over and above that what goes beyond what's in their nutrient management plan as incremental reduction. So that is kind of one of the nuances with kind of how that you would need to get to, is to kind of clearly understand kind of for each farm what was kind of required and then what was kind of incremental. this page that I'm showing here is kind of our best attempt to kind of show that, there is an important distinction to make between those two buckets, I'll call them, because, the first bucket, the reductions that were driven by complying with the RAPs, that is, part of the regulatory benefit towards achieving the TMDL, at least on water quality. And then anything beyond that, we would say would be eligible for kind of an ESM market in our mind. So that there is a part where that distinction between the two buckets is important for that reason. Does that make sense?
I think so. And so it sort of sounds like you're saying, there's some that sort of gets, some of the sort of universal aspects of the RAPs are just sort of populated, and then there's some that is sort of like overseen by the administrator, that because people do nutrient management plans in different ways, and there's some, as you mentioned, flexibility in the RAPs there. Okay.
Correct. Yep. So in this concept, that incremental piece is really what we would say would be eligible for a market perspective. It's kind of over and above what you've done, but beyond what you were required to do. I would come back to kind of this benefit gap slide, and you think about it in the context of what we just described. If you're a farm who's considering implementing a practice or a technology, making an investment, if you will, on their farm, there's going to be costs associated with doing so, which the farmer, with working with his technical advisors, could kind of quantify. They would have a sense of kind of what benefits they would derive, whether it's cost avoidance on handling manure, or cost avoidance on avoiding tillage practices, for example. But really, they would be able to kind of define, hey, what kind of gap do I have left on benefits relative to cost that I need to kind of realize a revenue stream for, to incentivize me to kind of do this. And they'd be able to quantify kind of the expected environmental outcome. The example I'm using is reduction of phosphorus across their acreage. And that would really allow you to kind of generate, the farm would be willing to kind of make the investment and do the project for X amount of dollars. And the benefit would be Y pounds of P reduction, which would allow you to kind of calculate a dollar per pound reduction or cost associated with that phosphorus reduction. So,
can I ask a question about the model?
Sure.
This is Nancy. I'm curious, looking particularly at this in water quality, and we've heard a lot about it. In one of your slides, you said there's some preloading of data relative to weather. But knowing, for instance, that this year we've had 10 inches, I think, more rain than usual, some 28% or whatever it is, and that we're getting more sort of extreme weather events. Like, how does the model account for that?
Yeah, so the model basically has, I think it's the last 15 years of weather history kind of loaded specific to kind of, the Vermont region. And as part of the calculations, it basically runs through each one of those as a potential outcome that could happen. And basically, I would say uses an average of kind of those scenarios to kind of predict the outcome. So it kind of uses historical. So and you look at, and it uses that to kind of point to what an ongoing annual reduction could be. So obviously, in any given year, it would be wrong, but over a 5 or 10 year period, kind of going forward, it would be the average of those would expect to kind of come close to what the historical has been. And I would say that 15 years would be kind of rolling, so it would be continuously updated. So with the climate change that's happening and the more recent data is kind of fed into it, that would kind of be used to kind of inform better or more accurate kind of outcomes going forward.
Okay, thanks.
Yep. Any other questions? All right, I'm going to move along. So to kind of wrap up, I guess I would say our water quality example, I would just say that, from our standpoint, we kind of view, this example was based on, a program administrator kind of requesting projects. They would get a list of projects. They'd have the ability to kind of prioritize how they wanted to invest. I was using the simplest criteria, and when I spoke to it, is in terms of, dollar per pound of phosphorus. There certain could be other criteria that was kind of placed on that. Could be, other co-benefits, tactical basin planning priorities. You could kind of, add additional criteria beyond dollars per pound to make your decision on which projects to do. All depends on kind of, what the source of funds is and kind of what you're trying to incentivize. And I would say importantly, and this is a distinction relative to kind of perhaps, more programs that are grant related that kind of have been used in the past is we would say for this pay for performance model, it wouldn't be like a lump sum investment up front that kind of covers, the cost of implementing for the next 10 years. We would view that funding would be set aside in annualized amounts and only paid out kind of each year after the verification had happened. So you're not kind of paying up front and then there's no recourse if in year 3, the technology stopped working or the farmer discontinued doing practices. We kind of view setting aside that dollar amount for, if it was a 10-year kind of agreement, and each year the funding is released in annualized payments once the verification happens. So that kind of creates some accountability to kind of ensure that the ongoing practice is continued. And I would say the ongoing third-party verification would be the signal that the administrator would use to kind of say that, yep, the project is still going on, the practice or technology is still in place, and therefore issuing the annual payment. So didn't really cover that in the example, but I would say that's an important piece of it. That is very similar to how a environmental services market would work. You would have a benefit that you would be able to kind of quantify annually, and you would sell it on an annual basis and get payment for it. It would not be kind of an upfront payment for future activity. It's kind of pay as you go, so to speak. So to kind of summarize, this page really just kind of summarizes what we just talked through from an example. Again, this was a water quality example. We think this would allow some accountability from if it was a state being the funder or investor in projects, you'd be able to kind of illustrate a return on investment. We do feel that the Farm Prep tool, which is calibrated specific to Vermont and using farm specific data, would provide a high degree of confidence that the benefit would be achieved. And I would highlight there, it's not uncommon in trading programs for water quality to have an uncertainty factor. So, Nancy, you asked the question earlier about weather, and certainly any given year, the weather is going to be different than it was the last 15 years of an average. Most programs kind of use what they would call an uncertainty ratio. So, for example, for every 2 pounds that were modeled as far as reduction, it's not uncommon to say that you'll have 1 of those 2 pounds would be used for trading purposes. So you're kind of using a 2-to-1 kind of trading ratio, if you will. So that's a fairly common way to kind of guard against kind of the uncertainties that could come up in any given environment, weather being one of them.
And Nancy, sorry, could I just jump in one again? Nancy, were you asking about weather variability or climate change sort of shifting projections long term, or both, or maybe just regardless? Chris, how does the model deal with projections of climate in the future?
The model does not kind of try to simulate future weather patterns that, it's using history to kind of as a predictor, but it's going through a bunch of different calculations based on the historical pattern to kind of give likely outcomes based on that.
And the data is based on which years?
So it's based on the last, I think it's 15 years it goes back. So it's got the weather for the last 15 years. So it kind of runs, scenarios for each of those kind of scenarios. And then, each of those would have a different individual outcome, but it's kind of then pushing them all together to kind of, assimilate that into an outcome that you would expect over kind of the next 15 years, for example, right?
Got it.
I mentioned the pay for performance funding structure, which we think would be important to kind of provide accountability to ensure that the investment was kind of made in something that's going to be kind of ongoing. And we would say, taking a step back, the concept that I just kind of walked through really could apply to any kind of outcome or whoever the buyer is. If you I was speaking to an example of a state having a pot of money that they wanted to kind of procure projects. That could be a not-for-profit organization that had a pot of money that wanted to kind of procure projects, could use the same methodology. If it were a market that was there was a corporation that had dollars that they wanted to invest annually, they could kind of buy credits, if you want to use that term, for whatever type of environmental benefit they were looking for, to kind of fund the projects, because again, the dollars would be paid out on an annual basis. So really the concept is very flexible. It all depends on kind of what outcomes you're trying to achieve and kind of where the dollars are coming from. What I would say is, one thing we've been an advocate for is what we would call a pilot project. We think it would be a very interesting next step for the state to consider as they're kind of in this exploratory stage of ecosystem services. I would say our view is, it's pretty easy to do a theoretical project on paper, much more difficult to do a real project that kind of people can go and look at and touch. But we would recommend, doing a real project that provides an example of how this kind of pay for performance model market could work. What I would say is it would make sense in our view to start with an environmental outcome for which there is an established or accepted scientific basis to quantify the benefit. I would use the example as, soil health and carbon sequestration, for example. I think there's a lot more research to kind of be done there over probably multiple years to kind of really have scientific confidence in kind of what the benefit is. I would suggest those probably aren't the best place to start. I would start in other areas where there's more agreement or consensus on kind of what the basis is to kind of quantify a benefit. And I think combine that with, where is there a buyer that's willing to pay? Is there a demand in the market? So, as we look at Vermont, we see the easy opportunity that kind of looks from our perspective is water quality. There is a market from a demand perspective to clean up the Lake Champlain, and kind of the phosphorus issue there to address that. So we see that there's certainly a potential demand there. And we feel that, especially with the stone tool that's kind of being developed, that is an acceptable kind of basis to kind of have a conversation on what the benefit would be related to kind of implementing projects. So that's an example in our mind that we would see. If there was interest in a pilot project, I would suggest structuring it as close as possible to whatever the vision is of the future market, just so that from the entire project was kind of structured in a way that kind of fit, to be very illustrative of kind of what the future, market is kind of expected to be, so that people from whatever their points of view, or, all the different stakeholders, which is my last point there, is, there's a lot of different people. We've been kind of working in Vermont the last 2 or 3 years. There's a lot of different people that have a lot of different perspectives on kind of the topic for ecosystem services. And in a pilot project, one of the other kind of financial benefits or environmental benefits is really getting all those stakeholders to kind of look at a real project, kind of, get past debating kind of theoretically, but really let's use a real project to kind of be transparent on and kind of bring all the stakeholders to kind of weigh in on and hopefully provide feedback that can kind of shape a better program kind of going forward. So we see that as a positive, is to kind of really bring together all the stakeholders that maybe in some worlds would look at as a bunch of odd bedfellows, could really be an interesting group of people collaborating on a project to kind of try to move forward with kind of an ecosystem services pilot project. And this is the last page we have, just to kind of take a step back. This is kind of work that we've been involved with from a Newtrient perspective. Certainly in California, there is probably the most advanced kind of markets in this space. They've got the low carbon fuel standard and various incentive programs out in California that are particularly on methane and greenhouse gases that are driving significant kind of environmental benefit with incentives. We are doing quite a bit of work in Wisconsin. Similar to Vermont, they have water quality challenges. And quite a few of the water bodies in Wisconsin, they actually have trading programs set up for water quality. There's not a lot of participation. So we're actually, trying to advance the clearinghouse concept I talked about earlier as a solution to really increase participation in those programs. You guys are familiar with Vermont, so I'll skip that. And then in Pennsylvania, there's a different piece of legislation pending there that we've been supporting, which is more, looking to have the state treat kind of the Chesapeake Bay portion of their obligation from water quality as a procurement obligation. So a little bit different twist, but it has the market principles of saying that the state should be investing in projects that return the greatest return for the investment. So that's kind of the approach that Vermont is using. And then in the middle of the country, I've got ecosystem services market consortium highlighted. I would suggest that this working group kind of dig in a little bit with what that ESMC group is focused on. Newtrient is a member. We've been kind of involved from the onset of their work. They are really, I would say, focused on, I think exactly kind of what Vermont is hoping to kind of do, which is, they're focused on, carbon sequestration and water quality. And they're looking at it largely from, I would say, a voluntary market. So corporate social responsibility goals as kind of being the buyers. Their work started combined with the Noble Research Institute. So their initial work that they're kind of starting out with is kind of focused on, ranching and grazing kind of in the Central Plains, but they do have intentions to pretty quickly kind of go well beyond that and develop protocols for, across all regions of the country, different types of cropping systems. So, they have the challenges of, they realize there's some data gaps that they have to fund. They've got a recently, a week or two ago, announced a big FAR grant that's going to help them close some of that research gap. So they're a pretty interesting group, and I would suggest that it'd be worth the time of the working group to kind of dig in a little bit, and happy to share information if there is on that. So with that, that's the last slide we had. We thought we would take any questions if there is at this point. I think we've got roughly 8 or 9 minutes left.
Yeah, that would be great. All feel free to jump in if you'd like to ask a question, unmute yourself, or you can type something into the chat if you prefer. Maybe you were so clear that all the questions have been addressed. One can hope.
All right. Well, if there's no questions, we can certainly finish up. I would say my intent is to try to be at the next working group meeting in person on the 16th. So If there are questions that come up afterwards, I can certainly attempt to answer them there if I'm able to make that meeting. So
that would be great. And we've made a habit of sort of sharing a quick little summary of the webinars that happened between working group meetings at the working group meeting. And so if you're there, we may call on you to just sort of help chime in, but staff from AAFM has been taking that on as well. And thank you both so much. Really appreciate your taking the time to give this presentation. The working group really appreciates it. Thank you so much, everybody. Have a great day.
Thanks.
Thank you. Bye-bye.